Finally, we actually got an earnings report, and look at that. Market really likes it. Woo. Stock nearing 200. Of course, the company naming a new COO, Jenna Owens. Some of the numbers, on the surface, not particularly great. Q4 comp sales only up 6.5%, estimated up 8%. EPS missed. But of course, this is not so much an immediate quarter story and more about the longer term. And right now, look at that. It turned out it was a value play all along.
Well said. I mean, it isn't notable that we have these continuing executive changes over at the top when it comes to GameStop. You had, of course, a new COO being announced. We just had yesterday reported the chief customer officer stepping down. We had the CFO resign. You had hiring of an Amazon alumni, Matt Francis. A lot going on. But for me, the takeaway is e-commerce doing better.
Yeah, the company, it's a real company. Let's bring in, for reaction, Rod Alzmann. He's the co-proprietor of GMEDD.com, a GameStop bull since 2017, one of the originals. All right, Rod, you're a very serious investor. You've had 30 seconds to digest this earnings, though, and give us your complete analysis. What's your main takeaway from the quarterly report?
Yeah, Joe, a lot of time to really dive in deep. Scrolling through the release, I think the big take, looking at the 2021 strategic initiatives, you see a lot of language around customer experience, customer care operation. So that, I think, goes in line with what we've been seeing with these executive hires, focusing on improving their technology capabilities and really bringing the business from being that legacy brick and mortar oriented business to more of a digitized customer centric operation in line with, I think, Ryan Cohen's vision.
Talk to us about e-commerce, and happy birthday, by the way, if that balloon is for your birthday, Rod.
Belatedly one day, thank you. Too.
Well, happy birthday. Global e-commerce sales, it says in the small print, increased 191% for the fiscal year 2020, representing nearly 30% of total net sales. How does that fit into your long-term vision of how much we move away from bricks and mortar and move into really digital only?
Yeah, the comp number looks great, which comes off a very low base. And as you noted, the 30% number, I think, is a little inflated given all of the pre-order activity for the new consoles that was pushed through the e-commerce channel. And of course, we had a lot of forced activity through the e-commerce channel given COVID closures during much of the first or second quarter in 2020. So longer term, we'll want to see that number grow. I think we saw them report just under 700 stores were closed in 2020. So would like to get more clarity from the company on how they see that de-densification, that continued store rationalization play out going forward. But it's certainly movement in the right direction.
So this Amazon veteran, Jenna Owens, is going to be the new COO. Beyond what we see in the numbers here, what does that tell you about the sort of the crew that's coming together to turn this company around?
Yeah, Joe, they've been making a lot of hires of technology-oriented vets for the past couple months, ever since the agreement between Ryan and Co. and the company was reached in January 11th. So it tells me that the company's taking it seriously, and they believe that that's their future, if that's where they're making these hires. I mentioned the focus on customer, and I think there's a story out this morning in Reuters that I wanted to kind of highlight that really shows me how important the customer is, that kind of obsession with the customer to Ryan, and I think the folks that he's bringing on board, that he and the company are bringing on board. There was a story that Reuters had where he had a customer who'd sent emails to the company, upset about order delay, and Ryan reached out within 12 hours of the email to the customer directly, got on the phone with him, let him know, what was going on. He's upset about what happened, refunded the customer's money in tandem with Kelly Durkin, the new customer service chief. So I think you can see that they're going to really be embodying that customer-centric ethos of Amazon, like what Chewy did, and you're just seeing it already starting to play out.
We're already seeing Wall Street bets reacting to GameStop's results. And, there feels that there's tongue-in-cheek, as always. It says GameStop earnings misses top and bottom lines, proceeds to moon as expected. Whatever the case, this is a company that doesn't always move off fundamentals. But, Rod, your perspective is always on just where the stock is trading, 195, whether the story being told in these earnings vindicates that price point.
It's difficult to say, Carolyn. I think we continue to have the supply chain issues. Revenue came in a bit light. EPS versus the street came in a bit light, and they're going to continue to, as I think everybody in the supply chain is experiencing, these chip shortages. They're going to impact console production. That's going to, and obviously with COVID, there's been delays in software development that's continued to get pushed out later and later into 21 and even into 22. So, those things obviously impact the shorter term results. But I think that it's pretty clear there's a very euphoric, excited investor base that may also be customers. We've talked about this idea that these folks are likely not investing purely for the future discounted cash flows. So it remains to be seen if they're going to be long-term investors who are on board for this reinvention of this company. But the market had priced in a massive move. I think it was a 30+% move was priced in the options market, and right now with it being up 5% after hours, it's pretty ho-hum.
Rod, the one thing we haven't seen, which some analysts have expected, is capital raise or taking advantage of this surge in the share price. You've said in the past that perhaps the best reason not to take advantage of it is that they just don't need the cash, that they can execute this strategic turnaround without more capital. Does what you see today make you feel confident in that ultimately the reason they're not selling stock is they don't need to sell stock?
That's right, Joe. They don't need to. They have over $635 million in cash and restricted cash. They just paid off their short-term note that came due on the 15th of March. They paid down all of their asset-based revolver. They have access to cash. If they can lay out a pathway, we haven't had an investor day in years. So that's something that I think investors like myself and others will probably reach out to IR and be inquiring about after if we don't hear anything about it on the call today. But that is something that I think many of us are eagerly anticipating is in addition to those 21 strategic initiatives, what does the path forward entail? And if there is a need to raise capital to invest in e-fulfillment capabilities, et cetera, that would be okay. But right now there's no need to raise cash if we don't have a plan.
Ron, how much do you read what the sell-side analysts, the buy-side analysts are putting out from the larger institutions, and whether or not you care in particular? There's not a single buy rating on this stock at the moment. They all worry about the fundamentals not vindicating the price point. But to that point of having investor days, do the CEOs, do the executives now need to sit down with sell-side, buy-side analysts and try and give them their vision a little bit more actively?
I think there's been an adversarial relationship between the sell side and the company for some time now. I know in my reading and research that I've determined there is a significant portion of some sell side analysts' books who were short in the past. So I can understand why the company may have been reluctant to engage too heavily with some of them. There was an analyst that had a $1.60 price target on the company just a few months ago, for example. I think he's raised it to $10 now. So I think that they could improve that relationship by having an analyst day to help the sell side and buy side appreciate the direction they're going. But clearly, that was a missed opportunity a few months back when my team at gmedd.com put out our research where we had really dug into things to understand that there was, in fact, an opportunity to justify the price reaching triple digits and higher. So that does remain to be seen what the path forward is. And right now, there's a lot of uncertainty, no matter how you slice it, as evidenced by the nosebleed implied volatility around the stock's options right now.